Aparna Karnik is joining us from DSP Mutual Fund to talk about markets and also about the multi-cap fund she helps manage. Aparna, afternoon. Thank you so much for your time. There's a very interesting note which Jeffries put out today saying that India's Goldilocks environment is getting challenged on valuations, on flows which are turning sour, earning season getting over. How are you looking at the environment, the entire setup, the indicators, which you read very closely?
So, one part of our, multi-asset framework essentially requires that you don't need to predict the environment, but still, if you look at our view in terms of markets, we believe that earnings have been in general good. There are tailwinds, but maybe valuations could have, run a little ahead of themselves, a little above their long-term averages. So, if the market consolidates, sort of stays where it is, consolidates for a bit, let the earnings actually catch up to the valuations, we think that'll be probably a good thing. In terms of sectors, we think there are still several sectors which offer good potential because earnings are strong and valuations are not excessive. But there are also, on the other hand, sectors where maybe we believe the valuations could have been a little ahead of, where they ideally ought to be.
In your multi-asset framework, what are the top indicators you watch? If you can just, explain the framework a little bit.
Yeah. So, see, the basic concept of multi-asset is very well understood. It's very important to have a diversified portfolio with both offensive and defensive assets, where you have offensive assets like stocks, which do well in periods of growth. But it's not always, growth, right? You have periods of decline, you have periods of inflation, you have periods of deflation. So for that, you need assets such as gold and commodities. You need assets such as fixed income or other income generating assets. You need cash and hedges to be able to have a smoother journey over the long-term process. So in terms of our multi-asset framework, we recognize in our framework that markets are not, they're multi-dimensional, right? There's so many factors, growth, valuations, policy, interest rates, global macros, which impact, how sort of markets behave in that two different types of markets, whether it's stock market or fixed income, etc. So in our framework, what we try to do is we've tried to, estimate long-run trend return estimates of different asset classes. For example, say an equity asset class where the returns, long-term returns would be probably a function of the dividend yield and the nominal earnings growth. So for that, we would look at, macro indicators such as GDP or inflation or long-term earnings yields, valuations, etc. And similarly, we look at yields, say for fixed income, or in case of gold, we look at long-term returns. And what we try to do is we try to assess where each of these asset class looks from a relative attractiveness. And then we try to create a blended portfolio such that there is some representation of each asset class, but we look at the risk and return profiles of each of the underlying assets and create like an optimum mix. Where you have an optimum mix of assets with a good returns to risk profile, which you can expect over a longer horizon.
Aparna, what are your thoughts on, two macro indicators, inflation, near term and longer term, and the impact it would have on cost of capital? We are having this discussion right ahead of the MPC board meet tomorrow. Outcome would be out. And the sense is that because near-term vegetable and other food inflation products may have risen, there could be a hawkish tone from the RBI governor. And also, if you look at 6, 8, 10, 12 months far out, where do you see rates versus inflation equation moving?
So in terms of inflation, if we look at a slightly larger picture, because in our multi-asset also, we don't just focus on only India, but if you look at the broader global, macro, we have seen, especially in Europe or in China or in the developed markets, inflation has started to sort of ebb or come off essentially from its very high levels. And in fact, in some markets, we've even started seeing a deflationary kind of a scenario building up. Our internal view also is that we believe inflation is likely to slowly come off. So we are not expecting to see very high or increasing inflationary environment over the medium term. In fact, we expect to see the reverse. I think the rate expectations essentially follow from that sort of view. Of course, it's difficult to predict the very near-term environment, but that's our sort of medium-term view, you could say.
Right. All right, Aparna, we'll let you go on that one. Thanks so much for joining us. That was Aparna from DSP Mutual Fund, manages the multi-asset framework and the funds.